Are you a business owner looking to secure your financial future and create a lasting legacy? I'm Leah Garcia, a financial strategist and insurance professional, and I specialize in guiding businesses with up to 50 employees on how to effectively protect and transfer their wealth. We break down silos with my unique approach, the Wall of Wealth. Imagine a seamless collaboration among your CPA, tax attorney, estate planner, and insurance expert, each playing their part in perfect harmony, ensuring your financial strategy is not just effective, but a true masterpiece. My passion stems from my own journey, from growing up on food stamps to dreaming of building community centers that empower others. Together, we'll craft a roadmap that not only safeguards your assets, but also nurtures generational wealth for your loved ones. Let's transform your vision into reality. After all, you can't measure the heart of a champion just by looking at them. Join me, and let's make your financial future shine.
And ladies and gentlemen, boys and girls, we want to welcome you all to the amazing special broadcast of today's amazing show, Money Myths and Love Insurance Truths in the Hello Plaza in Metaverse, that you can join us from your cell phone, your laptop, your iPad, and yes, even your phone right now. You can upgrade from that 2D watching to the 3D, the new experience, the new engagement. And we have an amazing guest today. If you don't know, not just guests, I should say hosts, everything up underneath the sun, especially when it comes to financial strategy. Miss Leah Garcia, Wealth Today, Dynasty Tomorrow. If you guys don't know, I don't know where you've been hiding. She is everything when it comes to financial strategy on LinkedIn, on YouTube, on Twitch, on Instagram today. And we want you all to come and be a part of this amazing conversation with Leah, because we're going to have a conversation, the real deal, Holyfield. When we talk about the myths, we talk about people that don't know what they're talking about. We talk about people that do know what they're talking about. We're going to talk about it all. So you never know what you're going to get today. But I promise you, it's going to be well worth it. And without further ado, Miss Leah Garcia, ma'am, talk to us. How are you doing today, ma'am?
I am doing amazing. I say that if you stay ready, you don't have to get ready. So I'm always ready to have a conversation about money. Anytime, any place, in the middle of the night, you call me up and we can talk about money, building wealth today and dynasty tomorrow.
I love it. I love it. I love it. And, you know, as we talk about, you know, this insurance and this long-term insurance and things of that sort, a lot of the times, you know, we talk about these things, and I'll just be honest with you. Sometimes people just don't know. So I think before we go into the, you know, the questions, can you give a brief explanation of what long-term insurance is, what, you know, life insurance is? Can you give people a differentiator of what those things are? Because I think a lot of times, just like with metaverse, just like with AI, just like with technology, people think they know and they don't know when you get it behind closed doors.
Yeah, for sure. So I think about myself this way. I'm like an event planner, but I help people plan for those unexpected events. One of three things is going to happen to us, and sometimes all three. We're going to live too long, we're going to die too soon, we're going to get sick in some form or fashion. We'll get diagnosed with a critical illness like cancer, heart attack, stroke, Lou Gehrig's, Alzheimer's, or have a major accident, something that debilitates us over time like arthritis. So those kinds of things, we never want to think that it's going to happen to us, but guess what? It happens to someone. And life insurance and long-term care insurance will really address all-encompassing. Sometimes even life insurance can be all-encompassing to address all of those. Long-term care insurance is something that people tell me, oh, Leah, you know what? I'm not going to go into a nursing home. My family's going to take care of me. And then, you know what? That sounds like a good idea until the reality hits and your family is there and suddenly they're having to help you get dressed, taking you to the shower, and you know, wiping the drool from your, it's just not what you want. What I think, that's really not what you want your last memories to be with your family. You want the last memories to be of the memories, making the memories, talking about the memories, going places, doing things, having experiences, and having somebody else that helps to do that heavy lifting. So does that kind of help a little bit, Mr. Mike Drop?
Absolutely. Absolutely. Yeah, helping people understand just the basics. And the way that you explain it is definitely, not all that techie guru, this insurance, that insurance, is this, hey, this is what it is at the end of the day. And I think that's the one great thing that people love about how you explain insurance is, hey, here's the benefits. And so, we got some people on here that I want to definitely be able to welcome and thank them for joining us. Mr. Felipe, I know you know Mr. Felipe. Michelle
Woo-hoo!
is in here. We got
Right.
Nicole that is in here as well. So thank you all for joining us. Definitely make sure you guys put your comments, put your love in here. Leah definitely loves that for you guys to join us. So, the first question that I have, ma'am, we're going to get right to it. A lot of people say
Okay.
this. I don't need long-term insurance care, right? I'll
Yeah.
self-insure. What's
Right.
your answer to that?
That sounds good. Again, I'll self-insure. I've got a lot of money. I've got enough money. I'm totally fine. I hear that all the time. But you know what? Here's the thing. I'm going to tell you a story because this happens. I wish I could say this is something that happens occasionally, but this is what happens to me. I get phone calls about this almost on a weekly, sometimes a daily basis. Couple, husband and wife ends up being the caretaker for her husband as we think, okay, my family's going to care for me. And then the husband passes away and now we have his wife and she's there. She's never dealt with the finances. They probably didn't set up an estate plan. They have no living trust. They don't have life insurance. They didn't buy long-term care insurance. And now she's trying to put all these pieces together. And now who takes care of her? Who takes care of her? Do you know that the average long-term care stay is about 3 years? And by the way, most long-term care episodes begin in the home. We don't go right from our home to a facility. We start in our home. And what happens? We need someone to help us to take care of the household daily chores. We need to alter our home so that we can get into the bathtub properly or take a shower. Maybe we've got to install some ramps. It can be costly. And the average cost to take yourself through that entire experience is well over $350,000 in today's dollars. But you know what? We're not going to use this today. We're going to use it years from now. So you're looking at $500,000 or more. Can you really carve out $500,000 out of your estate plan, out of the assets you have to allocate them for long-term care benefits? And you might say yes, but most people are going to want to know how that can they leverage that. Instead of it coming out of your pocket, doesn't it make more sense to have it come out of the insurance company's pocket? Because for pennies on the dollar, you can eclipse that cost.
Yeah, that's so true. I was watching an advertisement the other day that, they're trying to get it to where we can live to like 150 years old. Could you imagine being a Walmart greeter at 125 years old, trying to, pay for your insurance? So, you're so spot on. And, that's even more so, we talk about insurance, but I'm just going to be honest and upfront with you. We also have a responsibility in how we take care of our bodies now and what we feed it and what we do to it. And we also cannot just rely just on insurance. We can also do our part and also make sure we're preventative. And a lot of the times we wait till we're too late, because the fact is 70% of people over 65 will need long-term care. The average cost of a private nursing home is $7,908 a month.
Yeah.
I don't know about you, but I don't have an extra $7,000 laying around for my parents, to put them in an old folks home. I'm just saying. So this is where, we can be preventative now. So moving on to the next question. This is another big one. Only wealthy people need a living trust. What do you say to that?
That is a big, but I want to kind of circle back really quick because you did kind of bring up something. People think that they can wait and to get long-term care benefits until they're older. But I'll share a quick story. My 19-year-old nephew was in a truck versus motorcycle accident, and through no fault of his own, truck hit him, ejected him 90 feet off of his motorcycle. His boots were still in the pedals. And he was airlifted. We didn't know if he was going to make it through the night. Thank God he did. But he's got a forever chronic situation he's going to have to deal with. Traumatic brain injury, bones that are still healing and tendons recovering. And so accident, illness knows no age. Yes, we can do things to keep our good health, but things just happen. So living trust is another part. These really go together. Long-term care and living trust or estate planning are the two things, the biggest blind spots that I see. And yes, people think, well, I don't have a lot of things. I don't have a lot of money. So I don't need a living trust. I can just write down a will. I'll get a holographic will. That's what I'll do. At the last minute, I'll write it down, stick it under my sofa cushions. Hopefully my loved ones will find it, and then I'll be okay. No, please don't do that to your family. Because if you don't write down legally, right, put it in a legal format, in a living trust, have it proper, current, and properly funded, you've left your family a mess. Now they have to figure out, they have to try to reconstruct what you wanted, what your intentions were. And, maybe you told one person one story and then somebody else got another story. And now there's bickering, there's heartache, because that's when the emotions come through. When people pass away, that's a very emotional time. And we remember the stories of when we were little and, how you didn't treat me this way. You wouldn't even believe the things that happen when someone passes away, the bitterness that comes out in people sometimes. And if you leave your actual wishes, not in a will, because a will is a wish, you have to document it properly, legally. Please don't do it yourself. There's these do-it-yourself kind of things. It's not just about protecting your assets. It's about protecting your intellectual property. Maybe you have family heirlooms. Maybe you do have life insurance that you would like to set up for a foundation or start a nonprofit. Maybe there's something near and dear to your heart that you want to go into perpetuity. I have one client, that single mom, she went through folklorio, Spanish dance through her childhood, and she said it really, really saved her as a young adult. That was her special place. She got a lot of great feelings about that and was able to travel and do that. And so part of her estate planning, she's not a wealthy woman. She owns her home and she has a small life insurance policy, only like $500,000. That's all that, we could do in her budget and stuff. But she carved out $50,000. And that $50,000 is going to start her own organization, like a nonprofit, so that she could donate not 50,000, but what we're going to do is invest that money for her, so she'll be able to donate at least $5,000 every year and pretty much into perpetuity. So it's not just about how much assets you have. Really, it is about the wealth you accumulate and what is that dynasty you want to leave behind. It's about your intellectual property. Maybe you have family stories that you want to continue beyond you. And I believe everyone has a family story. But if we don't document it properly, it gets lost. It all dies with us. All your wisdom, all your knowledge, everything that you've worked so hard for, it all goes with you. And that's why every generation has to restart. I mean, let me ask all of you a question. How much different would your life be if someone had left you not a handout, but a hand up? That you knew that, hey, if things get tough, I can borrow from the family trust, or, maybe some money so that you could start a business or buy your first home, go to college. Would that change your life a little bit? would have made things a little bit easier? And if the answer is yes, then why wouldn't you want to do that for your family?
I feel like I just got finished watching one of those commercials with the dogs and donating. Like, I want to give you my money right now, Leah, and go ahead and get my own.
This is a real. This is a real deal.
It's so true. It's so true. And I think one of the things that people also, you know me, I love facts, right? Is, the probate cost, is average of 3 to 7% of that estate value. So you giving away money. And then not only that, it can delay access up to 9 to 18 months. And most people can't make it, 2 months, 3 months. And so you really protecting your family and having that, trust is so important. So it's easy access. And like you said, being able to borrow against it, being able to protect yourself, there's so many benefits to a live in trust. And once again, financial literacy is caught, not taught. And if people don't know these things and they're not aware of these things, then they find out too late. And it's like, dang, I wish I would have booked that coffee chat with Leah and found out about all these things and the tax benefits and so many other benefits that go along with it if you just educate yourself and learn these things. And so often we say, oh man, I wish there was something out there, and it's right there for us, right? So, move on. You got anything?
No, that's you're so right. You're so on point.
Right. Okay. So the next question I have for you is the only way to quickly pay off my debt is to pay off extra towards my principal or consolidate. What you got for us?
Yeah, that's a real old-fashioned type of way. Think about like back when phones came out, we had the flip phone, and now we have these smartphones that are electronic and do all these amazing things for us. Well, everything has evolved. So if you're still using that old-fashioned, dusty, crusty snowball to pay your debts off quicker, if you're still thinking that the only way to pay off your mortgage is to double your payments, pay bi-weekly, pay $100 extra, that's cute. But there are strategies that you can use that you can quickly mitigate and eliminate your debt. So one thing you can do is if you have a 401k, you can convert it to a solo 401k. You can borrow up to 50% from that 401k, pay off your debt up to $50,000, and then pay yourself back. That is a loan that you qualify for. There's no tax returns, there's no bank statements needed, and the interest is like 4.5%. So you can quickly pay off your debt that way. And when it comes to mortgages, there are new ways and systems to pay off your mortgage. And there are mortgage loans that will get you out of debt within less than 10 years without paying extra. And think about it this way. When we start paying our mortgage in the beginning years, most of the money goes towards the interest. And a very few small portion of that payment is going to the principal. Well, these new improved loans, what they do is they reverse that. So now the majority of the money is paying towards the principal, and a very small amount is going towards the interest. And now it happens. You can pay off your mortgage in 6 to 7, maybe 8 years. And I'm not talking about if you only owe 100,000. This is mortgages that could be much, much more than that. It's the same concept. Now, you do have to qualify for it, but if you can you imagine? I just had a client, she has 29 years left to pay on her mortgage. She bought her house a few years ago, and she refinanced last year. She owes $197,000. She's got some credit card debt, a truck note, and she also wanted to do some investments. So we were able to pull out $180,000 out of her equity, pay off her existing mortgage, pay all the debts off in 6.8 years. And by the way, that is without paying $1 more than she's paying right now towards her current mortgage.
Boom. Let that be sit in for a little bit. That right there is huge. And this is just so people, just have, a coffee chat with you. Or more importantly, go to Leah Garcia, right? .io and go take her amazing interactive wall of wealth. This isn't just an old Adobe that she used to have, a PDF file that she would just bore you to death reading it, right? This is really each and every single last one of you can get a different score based upon, where you're at within your financial, health right now. And so don't be afraid to take it, because look, I share this with Leah all the time, that when we do have these conversations and we talk about finances, you're talking to somebody else about your money. And you really don't want to talk to somebody else about your money. Don't want them to know your financial situation. I get it, right? Leah definitely gets it. But why not, why hide? And the good old saying is, denial is not a strategy. Go ahead and know where you're at right now. And I promise you, just like when you go to the gym and you get finished with the gym, you're like, dang, why don't I go to the gym more often? It's going to be the same concept, right, that you have with Leah when you get off the coffee chat with her and be like, I should have been investing in this a whole lot sooner. And so, Leah, do you want to share with them more about your amazing wall of wealth?
Yeah, the wall of wealth is a concept that I've been teaching to my clients for well over a decade, because this is what I found. People would come to me and they wanted to start flipping real estate. They wanted to start buying and selling stocks and doing all these really incredible investment options. However, they did not have a foundation. They didn't have the proper type of health insurance. They had little or no life insurance. They had no disability plan. They didn't have an emergency fund. And so really what this is intended to be is like the layers of the cake, right? It's like building a house. You don't want to put the wall and the roof and the windows on before you lay a proper foundation. And really it's intended for you to go step by step. Now, maybe some of these layers they may not be relevant to you, but it's a systematic way, a checklist that you could go, okay, do I have the proper type of health insurance? Do I know what my deductibles are and my out-of-pocket expense? Do I have a PPO where I can go in-state, out-of-state, out of the country? Life insurance, right? Do I have the permanent life insurance, or do I have temporary life insurance? Do I have life insurance with living benefits? And living benefits that pay you, whether it's a term policy or whether it's a permanent policy. Does it pay you if you have a critical illness, like, cancer, heart attack, stroke? Can I access money if I were to have a chronic illness, like a major accident? Can I access it if I have a critical injury? Can I get money if I have a terminal illness? This is a big one. I have clients right now. I have probably about 4 clients that are going through catastrophic illnesses right now. It happens, folks. We are all healthy until the day we're not. And then do I have anything for protection for Alzheimer's? A lot of Alzheimer's has been on the rise, and a lot of people have that kind of in their family history. So those are the things you want to make sure you have in place. And I love all those other types of investments. But first, let's put in the foundation so that you're protected. Whether you live too long, die too soon, or get sick, you're protected. And then everything you do else is the cherry on the top. Because if you start with the cherry on the top, and I've seen this, people who say, you know what, I don't need life insurance. I'm going to go ahead and buy and sell real estate. And then the real estate market crashes. And now you can't sell those homes when you need them. You can't pull equity out because you're having a life event. Maybe you lost a job, or maybe you're suffering with a critical illness. So now those houses have become pointless. You end up losing them. So that's why the foundation protects all of your other assets. So hopefully that helps. And I would love everyone to share that and check it out, download. I mean, I got to give a shout out to Miss Chris, Miss Tara. It is so beautiful. I got to give her a little bell there because she did an incredible job with it. And it shows right there, protect, distribute, and transfer your wealth. Protect what you have, putting the right insurances in place, right? And then distributing them. because we don't just have this pile of money just to spend it. There's a systematic mathematical way to start spending your money when you get into retirement. And then the wealth transfer. We have to set up the proper estate plan so that wealth transfers seamlessly. It transfers the most economically and really does create that family dynasty. Hopefully that helps.
Absolutely, it helps. And those of you that are watching us live in the metaverse, that screen is showing protect your wealth with the cake analogy that Ms. Leah was talking about right behind us. So you can see that. And then, of course, if you go to leahgarcia.io, you'll be able to see that diagram and definitely hit that button, press that button, and go get your own financial wealth score while we're at it. So real quick, I know we got some new guests that have joined us. Of course, the one and only Miss Lisa is with us. If you guys don't know, the menopause queen herself, you definitely got to go learn more about her and see what she's up to. She has her amazing rooms on Tuesday. And then we have Miss Sharon Ross. Miss Sharon is with us as well. She says amazing wisdom gems. Thank you, thank you, thank you. We got Miss Nicole again. She says, Leah's doing all of this for my husband and I right now. We are so grateful. Leah is very private and non-judgmental. Boom.
Oh my gosh, Miss Nicole, Miss Nick, I love you so much. Thank you for the shout out. It's truly an honor to have the opportunity to be of service. It truly, truly is.
Yeah, we got one more. We got Miss Sharon Burns. She says, definitely talking with Leah is the best thing I did for my financial health.
Wow. Thank you, Miss Sharon. I appreciate you so much.
Yeah. And then Miss Sharon Ross, she says, live too long, die too soon, or get sick. Brilliant. Well, when you put it like that, Miss Sharon, you got a point. Just make sure you're not a Walmart greeter if you live too long, okay?
There you go. There you go.
And if you die too soon, live it like it's your best one every day. So, right. As we close up, I got maybe one or two more questions for you. Yeah. The only way to quickly, or no, we already talked about that one, right? Do you really need a lot of money to start investing, or is this just a myth?
That's a great question. I say I start where you are. All progress starts by telling the truth. So the first thing I like to do is to start with, like, what are the finances? What's going on? What is the income? And what is the outgo? And then I want to know, like, where are all of the debts and what's going on with the investments. I like to have those in one access, like a financial snap, just starting there. Don't much not in your money. I had a client that she really, really had the heart. She wanted to start saving and investing, but she said, you know what, I've got this debt, I've got that debt. And so we're helping her work on some things. I said, okay, do you have $1 a week? Can you start with $1 a week? She looked at me. She's like, well, yeah, I can do that. Okay, this is what we're going to do. We're going to everybody go get, kind of look disappointed. And she's, well, at the end of the year, that's $52. You're going to go through those pennies and you're going to look for the pennies that are 1981 and below, because those pennies have a higher copper content. And those pennies can be worth 2, 3, 4, 4 cents, or maybe even more if you find a collectible. And at the end of the year, maybe you'll have a value of $300 or $400. And you know what, Mr. Mic Drop? The average family right now doesn't even have $400 for an emergency. So I told her, at that point, you'll be further ahead than most people. And maybe that's not going to totally change everything for her. But you know what it's doing? It's opening up the space in her mind for saving and investing. When we change the way we look at things, the things we look at change. If we don't have that muscle, if we have our muscles atrophy when it comes to saving and investing, we're not going to go from investing and saving no money to investing and saving millions of dollars. We got to build up to that, just like the gym analogy you made earlier. So when we start to build up that muscle of saving and investing, it's like anything. You're going to find other opportunities. You will be dazzled and amazed. Other things will come to you. People will reach out to you. You'll discover something, maybe money that you didn't know. By the way, go onto my Leah Garcia, my website, and you can look for money that you is missing from you that you have there, missing money. So things will happen just because you're putting more attention to it. So does that make more sense?
Absolutely, it makes a whole lot of sense, right? and you know, we can talk about this all day long. People have a dollar, like you've shared. You know, it doesn't have to be your Starbucks money. It can be, you know, the money that you spend on lunch. You know, that extra sauce or that extra, you know, whatever you get. You know, or maybe not the car wash, you know, every single week. Maybe, you know, there's a Hulu or, you know, a Disney or some, you know, TV channel subscription that you can get rid of. There's something that you can sacrifice and be able to invest it elsewhere, because, you know, when you have this conversation, I beat myself up so much, but I'm so much further along than I was then, you know, not investing and not understanding to, you know, this money, that money, you know, we invested, you know, in the video a while back, you know, before everybody even knew, you know, little amount of money that we did put in is worth a whole lot more now. And, you know, this is where we share with people to not put your head in the sand and really be investing and seeing where we're going, especially as things are shifting faster and faster now, with this AI, with this technology, and just with money in itself. You know, you talk about the housing industry. A lot of people are about to get a huge surprise, you know, come this housing industry, as you know, now you're competing not just for a used home, but these new homes are now saying, hey, we're not selling our houses. You know, come on and get this free marble, you know, and buy this new house. And so this is where we really have to educate ourselves and understand the financial flow of how everything is going. So, you know, one other question that I got for you is, you know, does making more money, you know, automatically mean you'll be, you know, financially secure? Because I think a lot of people think, oh, I got all this money, I'm gonna be good.
Yeah, that's a great point. And some people think, well, when I get that job promotion or when I get that contract, you know, when I make that income, then I'll be good. And the truth is, no, it really isn't. A couple of my wealthiest clients really made very, very meager living. I have one couple, when I met them, they were already retired. They got married when they were 12 and 14 years old. And they actually worked in the fields. And they were field workers, picking cantaloupes and watermelons. And when I met them, they had over $500,000 in their savings, almost a million, you know, like $500,000 in their retirement, and they had 2 homes paid off in cash and no debt. And I asked him, wow, this is incredible. This is incredible. I have clients who make way more money than you two. How were you able to do this? And Mary told me, she said, you know what? I barely had a second grade education, but we were working so hard in the beginning, and we're paying everyone else. We're paying the electric, we're paying the car note, we're paying the mortgage. I started to think we're going to pay ourselves first. And I started, it was hard, but I would pay ourselves first 5% of our income. And then we worked up to 10%. We got to the point where we're paying ourselves first over 25% of our income. So it really isn't about how much money you make. It's how much money you keep and how much money are you going to pour into future generations.
Facts, you know, instead of buying, you know, that new Coach purse, especially Christmas time is coming up, instead of you buying all those Halloween gifts and buying all the candy and, you know, nonsense or going here, going there, invest that, you know, somewhere, because it's definitely going to be well worth, you know, later on. Like I said, I want you all to remember this. Your goal is to not be a Walmart greeter when you're 80, 90 years old in the metaverse, okay? not going to be in person. It's going to be in metaverse. That you're going to be a Walmart greeter, being a security guard in the stores in virtual reality. At the end of the
Well,
day,
now they have AI, Mr. Mic Drop, so they're not even going to be able to be a Walmart greeter because it's going to be the Mr. Metaverse guy, Mr. Tech guy greeting us now.
that part, that's if you have a job, but that's a different story for a different time. But one of the last questions that I have for you, is life insurance really, just for people with kids, or does it serve a bigger purpose?
Well, it's for people with kids, obviously. That's what people think about. But there's so many things you can do with life insurance. You could have it so that it is actually creating your long-term care benefits, right? So if you have permanent life insurance that has a living benefits, you know that you have access to those dollars if you should suffer any type of a critical illness, chronic illness, terminal illness, critical injury, Alzheimer's. But also there's the other part to that. You can use it to create an estate. If you don't have a lot of money, but you want to leave money to your family, you can get a life insurance policy. I had one couple that never really made a lot of money, but every few years they'd save up their money and they'd buy a whole life policy. They'd save up a few more years and they'd buy another whole life policy. And by the time they passed away, they had over almost like $1 million that they were able to create with their estate. So that's one thing you could do. You can also do some fun things like cash value, right? Where you create your own banker. Instead of going to the bank, you now borrow from the bank of Mr. Mike Drop Jones or the bank of Miss Nicole Agai Galindo, right? That family can set up their estate plan that way. You can use it for buy-sell agreements, executive bonus plans. I mean, there's so many different ways that are advanced strategies that you can use for life insurance. It's really, I think about it, it's the last love letter that you leave to your loved ones. And, whenever I sit down with a family and we get them approved, because you do have to qualify for life insurance. It's not like something you just say, I want to pick it off the shelf and I'm going to buy it because I have the money for it. No, you have to qualify. That means you have to, you got to have decent credit. You can't have a major bankruptcy. You got to have your current driver's license. You got to have your good health. They look at everything, maybe pre-existing conditions when you were born or things that have happened. Maybe you've had an injury or a diagnosis. So if you can qualify for life insurance, why wouldn't you have this incredible tier one asset? We're not talking about the old type. We're talking about tier one investment grade life insurance. That is that last love letter that you can leave to your loved ones. Again, it'll help you whether you live too long, die too soon, or get sick.
That indeed. And, we got some other people that have joined us. We got Miss Chietza that has joined us. Miss Chietza says, David Jones, thank you, David Jones, for the continued learning and practical nuggets. Leah, been so instrumental in helping me put in place the infrastructure to build the walls of wealth and family legacy framework. As always, appreciating you, love it. And then we got Miss Sharon. She comes back and she says your money is yours. As Leah says, you decide where, how you spend it. So true. She also says, no, you have to know how to make money work for you. Facts, right? At the end of the day. And so she also says, this is where financial literacy comes in. Service a bigger purpose than just those with kids. So true.
Yeah.
And I think everybody should understand that, being able to utilize, life insurance at the end of the day, that 40% of policyholders use permanent life insurance for retirement income. Like you said, there's so many other things, cash value, things that you can utilize, income replacement, legacy building, that cover your debt that you can utilize for that. And if you don't know, you don't know. And once again, I'll share with people, my father, just like so many other people's fathers and families would teach them, hey, save for a rainy day, save for a rainy day. But what they didn't teach you was invest, and saving that money under the couch, saving that money in the mattress, saving that money for the bank for them to be able to go and take, the same money you got there and give you 0.001% after they've made, 500% on the same money you could have been investing. This is where these conversations with Leah can definitely be able to set yourself apart. So as always, just like when we share with people, to update your systems and foundations, do not allow fear stop you, right, from moving forward, because a lot of the times fear is focused energy arranged to react. And what you focus on, where your energy is arranged, and then you react in life. And a lot of the times we react to the negative things other than the positive things of, like I said, going to the gym. All of us probably know this feeling. You dreaded going to the gym. You didn't want to go to the gym. You came up with every excuse not to go to the gym, and then you just went. And when you walked out that gym, you were like, oh my goodness, why didn't I go? Why didn't I do this? When I got my hair done, why didn't I do this a long time ago? When I went to go, do something, get my inspection sticker that is out. Why haven't I went to go get that done yet? Now I'm not stressing so much. And so there's so many things in our life that we stress about that we make more than what it needs to be. And it's just, chill out and take a chill pill and have a conversation and communicate effectively.
Yeah, for sure. And I want to kind of circle back to something that you said earlier about the $7 Starbucks. Everybody always talks about, don't buy the coffee, don't waste your money, get your own coffee from home. And that's all fine. But you know what? Most of us are playing money checkers. I call it this, like one little movement at a time, right? They make some money to pay some money. They make some money to spend some money. They make some money to give it to Uncle Sam. We got to flip the script and start playing money chess. And this is what I mean by that. People are so worried and stressed over the $7 coffee, but they're overpaying on their interest. They're all worried about maybe spending a few dollars here and there on their blueberries. I love my $10 blueberries, but then they're losing money in their 401k, or they're overpaying Uncle Sam. So if you have those little things that are those things that warm your spirit, I say enjoy those. Let's look at the big boulders where really will move the needle. Let's pay down that debt. Let's stop losing money, right? We're making money and losing money, making money and losing money. Get off the merry-go-round. Stop it. Let's start realizing our gains. Let's start capturing those gains so we put them in our pocket. Those are the monies that we can actually spend. And then taxes. Listen, it's about understanding the rules of the game. The tax code is really a treasure chest. Most of us think of it as like something that is, harmful, and they're looking out for us and all of that. But really, it is a treasure chest. If you understand the rules of the game, then you know how to win. But it's when we don't understand what that roadmap is leading us to. It's trying to lead us to the treasure, but then we don't want to take the time to really look at what are our options. How can we best strategize with our money? It's right there. The IRS tells us right there. It's in the tax code. And if we leverage that tax code in our favor and we save more money, then we can go ahead and have the doggone $7 coffee all day long and twice on Sunday. That's what I say.
Yeah. So, as we get out of here and without closing thoughts, Leah, if you could whisper in somebody's ear that was, right on the edge of pressing that coffee chat button, leahgarcia.io, what would you share with them on why they should, have that coffee chat and have a conversation with you? What makes your conversation different?
Yeah, what makes my conversation different is I'm going to look holistically and proactively at everything you have going on. And I'm not here trying to fit some square peg in a round hole. I'm looking at what's important to you and your family. What is a dynasty you want to leave? What is a legacy you want to build? And then we're going to work together to reverse engineer and put the things in place. That may mean that we put some insurance in place. It may mean that I'm going to need to bring in tax, legal advice, financial advice, other experts. The benefit of working with me is that when you we do agree to work together is that you don't just get access to me, you get access to my team, my in-house team, my national team of experts, best in class, nationally acclaimed, that I can actually get you access to. And oftentimes I can get things for you that you could not be able to find and research on yourself. I help you to uncover and look around the corners and find those little blind spots that you're unaware of. Remember, there are things that we know about, and then there's things that we don't know about. We don't know about it because we just don't have the information. Well, I'm going to help you to access the information, the products and services, so that you truly can have the wealth today and build that dynasty tomorrow.
Yeah, you heard the woman. Press the button, as we say here at the Hello LLC, and make sure that you have that coffee chat and you have the conversation and you do something. It's better than nothing at the end of the day. Miss Sharon says, "Press the button, no judgment zone." Miss Sharon Rose says she will design a personal strategy from the end goal. I love it. Right? And so says that she means it at the end of the day. When she says she means, when she says team, she means it. Love it. So without further ado, Miss Leah, we want to thank you for joining us today. As always, us on your channel, you on our channel. Collaboration is the new currency. Collaboration is the new, frequency and vibration to where we all get to win. We all get to, expose our friends, our community together, because you bring your friends, I bring my friends, and we become family at the end of the day. And that's what it's all about, is really being able to engage and learn something new. And hopefully you all were able to learn something new. We were able to, spark something. We were able, guess what? If it's not you, for you to talk to somebody else. Hey, I know you've been talking about this. I got somebody for you. And there's nothing wrong with referring somebody and having them have that conversation, because I promise you, we are all one conversation away from wanting everything that we want. And that thing that you want is on the other side of the things that you're not doing. And I promise you, you knew exactly what that was when I said the things you aren't doing. And so one of them is those finances at the end of the day. And so, Ms. Lee, you got anything before we get out of here?
Yeah, thank you so much, Mr. Mic Drop. It's always a fun conversation with you. And I want to send out all my love to my beautiful champions who joined us today. I appreciate you. I love all of you. I appreciate your support, Miss Jezda, Nicole, Sharon, my Gita girl, Miss Gita girl, and all Felipe and everybody else that joined. I appreciate all the love and support.
Yeah. So you guys know what we're going to do. We're going to leave you with the video on our way out here and learn more about how you can get more with Leah.
Hey there, I'm Leah Garcia. Have you ever wanted a career where you truly make a difference in people's lives? I'm building a team of driven financial and insurance professionals, people who want to help families and businesses protect, distribute, and transfer their wealth with confidence. If you're passionate about guiding others to achieve financial security, then you're exactly who I'm looking for. Join my supportive, growth-oriented environment and unlock your full potential. Ready to take the next step? Visit leahgarcia.io and let's start building your future together.